General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Okay, let's do the work. Saturday the 13th. Gotta stay focused on the important stuff. This is the important stuff. Weekly review. Which models hit, which missed. Tuesday gave New York reversal, but most of the daily profiles overnight. Created a range in New York session just with hump stops. Identity, progress, patience, discipline, confidence. Been getting beat up and studying the executions, leaning into the learning, not running from it. Case study log. No case studies, been looking at the forex swings, dusting off CFDs, experience earned this week. Good mindset week, realizing where the execution drift comes from and being aware and creating environments where I can flourish. Next week, improvement focused, same focus, 1% a day improvement. Staying focused on habits and waiting. Power 3 charts. It's pretty interesting. We played around that old new week opening gap. Monday was a push up. Seems like everything's been super event driven, but still algorithmic. This is 0.618, and this came out to OTE exactly. Came down to the flat bottom, but we kind of just stayed in this range all week. After a large range day, Wednesday was small range, cool off day. Thursday, swell Wednesday expanded. We had SMT, but we didn't really leave this range or take this high. So it was kind of weird, but it was a lot going on. CPI, PPI, so CPI here, PPI here. And we had Oracle report earnings Wednesday. SpaceX was Friday. And I believe Trump said it was peace, but that's a whole nother story. Boom, boom, boom. Yeah, there was a lot of stuff going on. SPX, we actually had the SMT here. I was thinking that maybe it could be Wednesday midweek reversal with SpaceX, but it didn't deliver the enthusiasm. Didn't push price that high. And Friday is usually a half day. I think more people probably watched SpaceX all day and wanted it to do something, but there wasn't no institutions really moving it. So that's going to be interesting to watch. This is SPY. So SPY is Tuesday. We didn't have the Wednesday midweek reversal. We still in this range. Just came back to weekly open. Yep, and that's it for the week. All right, y'all have a good day. Peace.